Welcome. In this video, how many Zbcn do you need to become a millionaire? We will analyze this. Don't forget to subscribe, like, and please watch till the end to understand. But first, let's analyze how high the price will go. Looking at the chart in general, it is clear that price movements have been under a certain downward pressure in the recent past. In this process, the general tendency of market participants was shaped in the direction of selling, and this situation created a clear pressure on the price and paved the way for the formation of a downward trend on the chart. From a technical point of view, this downtrend had become an important resistance zone, especially for short and medium-term investors. Each time the price approached this trend line, it faced selling pressure and reacted downwards. This indicated that the downtrend was strongly accepted by the market and remained technically functional. In recent days, however, it appears that the price has pushed through this bearish channel, and even more importantly, it has broken this downtrend line to the upside. This technical breakout is not only a breach of a resistance level, it could also be an indication that the market is preparing to change direction, that investor psychology is undergoing a transformation, and that the start of a possible uptrend has been signaled. This is because trend lines in technical analysis are not just abstract lines drawn on a chart, but also important indicators that reflect the collective behavior, expectations, and decisions of the market. When the price breaks this downtrend to the upside, it signals that buyers are finally becoming the dominant side, while at the same time, sellers are losing their power. Such breakouts often form the basis for stronger and more sustainable moves when supported by increased volume. If there is an increase in trading volume during this breakout, it confirms the buyer's belief in the market and their strong entry. This indicates that the market has shaken off its bearish psychology and entered a more optimistic phase. One of the most critical phases following the breakout is the retest, the pullback to the trend line. This is exactly what we see happening right now. After breaking the trend line, which previously worked as a strong resistance, the price has pulled back to technically test this level. This behavior marks the beginning of what is often referred to in technical analysis as a support reversal. That is, the trend line that the price had previously failed to cross and continually retraced back to May now be being tested as a support. This retest is also a critical test for market participants. If the price manages to hold at this level and generates upward reactions, it means that the trend reversal is confirmed and the upward movement is sustainable. But we can't decide the analysis only by trends. Let's look at other metrics. Stay tuned. When the chart is carefully analyzed, it can be clearly noticed that the price tends to form a bowl pattern, which is a very characteristic technical pattern in recent times. Such patterns are among the strong indications that the search for medium and long-term bottoms in the markets has been completed and a new bullish cycle is about to begin. Currently, the price action on the chart is trying to form the typical structure of this pattern, with an attempt to rebound upwards after a period of sideways and downward movement. In technical analysis, a bowl pattern is usually formed after a downtrend, when the price reaches a low and then begins to recover steadily over time. This recovery process creates a round and wide structure, like the bottom of a circle. In order for this structure to be fully completed, the price needs to rise steadily to the peak level that it broke earlier, and then hold at that level. In this case, the current price action is developing exactly like this scenario. In other words, the price seems to have entered the completion phase of this bowl structure, approaching step by step towards the peak it had previously formed. In the case of the completion of this pattern, the calculation of the technical target can be done quite clearly. Usually, the price target for a bowl pattern is found by adding an upward movement equal to the depth of the pattern. In other words, the distance between the base level and the top level of the bowl is calculated, and this distance is added to the top level at which the breakout occurred to determine the potential target. In the current price structure, according to this calculation, the technical target is estimated to extend to approximately 0.013. It should be noted that this level may be an important resistance point both psychologically and in past price movements. In order to say that the pattern is technically sound, a few more critical elements need to be taken into consideration. First of all, it is important that the price has spent enough time at the lows and established a strong base after the bearish structure formed on the left side of the dish. This type of structure usually indicates that the market has reached saturation and selling pressure has subsided. A subsequent right-side rally, on the other hand, indicates that buyers are starting to show interest in the market again and are moving the price up in a controlled manner. In the current situation, both of these criteria are largely met. That is to say, the price first experienced a decline and remained sideways at the lows, and then started to gradually climb upwards. In addition, when this pattern is completed and the breakout occurs to the upside, there is usually an increase in volume. This indicates that investor interest is intensifying and the probability of a strong breakout is increasing. If the volume is supportive at this level, the possibility of the price rising up to 0.013 levels gains serious strength. Let's move on to one of the most curious and motivating questions in the investment world. How many coins do I need to hold in order to make $1 million? At first glance, this question may seem like a simple multiplication or division, but it requires vision, patience, and strategic planning. Because such goals are not only about technical analysis, but also about the right timing and financial planning. First, let's clarify our goal. Our goal is for the total value of the coins we hold to be $1 million, with the coins rising to a certain level in the future. For this example, the target price we're assuming is $0.013, which is a common and potentially expected resistance level in technical analysis. The first thing we need to do in this case is to calculate how many coins we need to own to reach this target. We'll do some simple math for this. To reach our $1 million target, the total value of the coins we hold multiplied by $0.013 would be $1 million. Therefore, 1 million divided by 0.013 equals 76,923,076.92 coins. This means that we need to hold approximately 77 million coins, or 78 million if we round up a bit, so that when the value of these coins reaches $0.013, our total wealth will be exactly $1 million. So how much money would we need to invest today to buy these 78 million coins? To answer this question, we need to know the current price. Let's say the current price of the coin is $0.002. If we were to buy 78 million coins at this price, we can immediately calculate the amount we would have to pay out of our pockets. 78 million times 0.002 equals $156,000. So to achieve this goal, we would need to make a capital investment of approximately $156,000 at today's prices. This investment would give us a return of $1 million once the coin reaches the expected level in the future. Of course, this calculation includes not only the investment amount, but also risk management and potential returns. Because if the coin actually reaches this target, the investor's portfolio will experience a very serious growth. Let's do a deeper calculation to put this gain into perspective. When the coin reaches the target level, that is $0.013, the total value of the coins we hold, 78 million times 0.013 equals $1,014,000. This means a total wealth of $1,014,000. In this case, the initial investment of $156,000 becomes $1,014,000 once this goal is achieved. This is approximately $1,014,000 minus $156,000 equals a net profit of $858,000. However, one very important detail should not be overlooked here. Such calculations are based on potential target prices. Although technical analysis, patterns, or fundamental developments may indicate that such a price is possible, cryptocurrency markets are highly volatile and always involve uncertainties. Therefore, risk factors should be taken into account when investing. All capital should not be put in one basket, and losses should be limited with stop-loss strategies when necessary. In conclusion, this calculation shows us the following. If, according to your analysis, this coin has the potential to rise as high as $0.013 in the future, and you recognize this in advance and buy at today's low prices, you can reach $1 million with an investment of $156,000. Of course, this scenario is only an example of a visioning exercise, but it helps to clarify and concretize the goal in the eyes of the investor. Achieving big goals sometimes requires seeing the big potential behind small prices. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.